Trader again. I'm just going to follow on from last week's post. I only just uploaded the post yesterday to my blog as I had a computer breakdown and I just received my computer back yesterday, but it did go up on YouTube. But it's since last week's post, it's actually pulled back just as kind of I expected, and so what I want to do is just follow on from last week's post and show um, the retracements in time. Last week's post I showed retracements in price, so I just want to follow on from that. So I'm just going to get right into it because I don't want it to be a long post. I'm trying to make them shorter. So as you can see, this is a chart from last week, and this was off the 2009 bottom. And what it does show is, what I was trying to show was compare the first run up from the 2009 low, and also from the 2010 low, and the 2011 low. The last few weeks I've shown that I'm bullish. I've shown the reasons why I'm bullish. So now I just want to show what to look out for. I think we're close to another opportunity to get long, and I just want to show you why and things to look out for, things that I look out for. So last week I showed you that from that first run up on the 2009 low, we had a Fibonacci retracement of 23.6%. This is the 2010 low, and we had a retracement once again of 23.6%. The 2011 low, we had a retracement. Actually, this 2011 is different in many ways, but I do want to show it because it was an extreme low, and also this run up was very, very powerful, and I was trying to work out whether or not we were going to get a pullback and another opportunity at an entry. But this week has actually proven that we have got another opportunity. So 2011 right now, we just didn't get an opportunity to get in after this breakout. So I don't think it's looking like this right now. I think we're comparing it more to 2010 or the 2009 low in terms of opportunity, I mean. So just so you know too, so I didn't have this last week. So that first run up in 2000 low bottom was a 17% run. In 2010 it was 17% for the first run, and 2009 was 40%. Now that's a little bit different. I mean, that was a literal crash low, a major bear market low. So naturally, in percentage wise, it's going to end days. It's going to be bigger. So what I want to show you is what we have is this is trading days that I'm going to show you right now. Okay, so from the run up from the 2009, we had 67 days. 2010 we had from this low, not from that low, but we had 50 days. We had 50 days. 2011 is a little bit different. That was a very, very fast run up, but it also had a bigger pullback. All right. Now it's at the moment today, if we look at today's market, we've had 47 days. So we've got 47 days up, 50 days up. It's very similar. And in terms of, like I just shown, in terms of percentage, we've got 17%, what I showed 17%, and in today's market we have, if I can get it back, is 15%. So it's actually, you know, in terms of price, didn't think it was going to go much higher than what I saw last week, and we've had a pullback ever since. So what are we going to look for to get back in? Okay, so in terms of the correction in time, so we've realized that both of those times is 23.6% in price. If we look at today's market, it's actually almost down to the 23%. So in terms of going back to time, from the 2009 low, we had a 19-day trading day correction. That does not include weekends. From the 2010, we had 16 days, so very similar. And today, we have 11 days at this moment. Okay, so we could get another few days down. Today's been quite a strong run up, but we could have a few more days down, making a new low. But at the same time, this correction could also be over. But I'm going to show you something, and just things to look for to get back into the market. Okay, so just so you know too, this retracement in time is about it's a 28% retracement in time. This one was a 32% retracement in time, and if we look at today, if it's already, sorry, 15 days trading days would be about a 32, which is pretty similar to those others. Okay, so like I said, it could have bottomed, but we might also have one more slight bottom. But anyway, it doesn't matter. Things to look out for. I just want to show you these volume-based indicators that I use. I'm just going to quickly show you. I'm not going to explain them. I think you need to go on stock charts and have a look for yourself. But I use the RSI, and I use a little bit different. I use an exponential moving average, and the thing's a little bit different there. I use the percent Bollinger Band, the CMF, which is the Chaikin Money Flow Index. We get the Money Flow Index down here, the Chaikin Oscillator, accumulation distribution, on balance volume. And anyway, I just want to show you, so these are not momentum indicators, these are more predominantly their volume indicators. So rather than lagging price, which I think the momentum indicators do, these lead price. Okay, so I want to show you what I'll be looking for to get back in, and I'll just show you. So this is the 2009 bottom, and if we look at the correction, the sort of a perfect entry would have been once it broke that resistance, as I showed last week. But in terms of using these volume indicators, if you can see each one of these volume indicators, once the moving average broke, or price, broke back above the moving average, and in some of these instances above the zero line, then we've got another buy signal. Now if you look at this, you had 1, 2, 3, 4, 5, 6, 7 of these indicators all confirming this breakout. So you've got a pretty clean entry there. If you look at the 2010, same thing. So we've got the breakout, resistance. We have all the indicators. 1, 2, 3, 4, 5, 6. 6 of the 7 are green. So it's a pretty safe entry there. The money flow index isn't, but I mean 6 out of 7, you'd pretty much go with that. So if we have a look at today to compare those, today, like I said, we've had a pretty strong update at the moment. It's 11 o'clock in the morning, so anything can happen from here. But we seem to be crossing on the percent Bollinger Band. We're close to crossing on the RSI. We've crossed on the CMF. We're just about to cross on the OBV. We're already in accumulation, and we're just about to cross here. And once again, the MFI is lagging, but we're close to having 6 out of the 7 already, and we're close to this resistance level. So, from what I've shown you last week and this week, if we break this resistance level, then that and all these indicators here across to the upside, then that's pretty safe entry. You'd be pretty happy going on there. And obviously, you have your stops where you feel under that low would be a pretty good place to have the stops. But once it breaks that resistance with all these indicators going green, that's a pretty safe entry for the moment until things change. Scale. I just want to go into silver quickly because last week I did show silver. Now this was from the 2009 low in silver. I think we've started a bull market in silver as well, but I was expecting a pullback, which we have got the last week. Just looking, so what sort of things am I going to look for to get back in? Well, first of all, I showed you the corrections in time to show you that in a bull market, there's no point in comparing price action in a bull market or a bear market because they just behave differently. That's why I'm comparing it in the bull market here. So pretty much each of these big corrections here are 3 months with silver, and if we're coming out of the base of a low, which I think we are in silver, then, and especially when you look at this price action here and where we are here, we've got a run up, a correction, a run up, and that's 4.5 months right now. In 2009 we had a run up, a correction, very similar looking run up to resistance here, which is what we had here last year, right now, and that's a 4 months. So we had 4 months up, Right now we've got 4.5 months up with very similar price action. So will we get the 3-month correction? I don't know that, but I'm just, history does rhyme, so it's just something to look out for. If price could continue to gun higher here, and if it does, I'll be looking for the similar sort of thing. If we get a break of resistance here and all these indicators are gunning higher and confirming it, then I'd be happy to get in back into silver. But just looking at history, you'd think we're still quite a ways away from the 50-day moving average and the 100-day moving average. So, I'd like to see price move back down to those moving averages with a little bit more time. And that would be August. If it takes 3 months to correct in this initial phase, then silver won't be a buy until around about August. But again, if it breaks out before then that's fine. So I just want to show you those same volume indicators with the SLV, and SLV is the ETF of silver, and I can only show you on that because these volume indicators the volume indicators won't work on the actual silver chart or the US dollar chart. You have to look at the ETFs. Anyway, so we've got a pretty clear resistance line, and if it does break that with these indicators turning up, then I'd be happy to get back in. I would like it to see move back down to the the moving averages and support here, but I certainly won't get in until I start seeing these indicators move back up above their moving average, which at the moment you can see 1, 2, 3, 4, 5 of them are down. So I'm not going to get back into silver until they move back up. Same with, I'll just show you the US dollar, or the UUP, which is the ETF of the US dollar. Once again, we're moving up to some pretty solid resistance here, but the indicators at present moment are up, and I will not get long silver or short the US dollar until I see these starting to roll over. Again, I would like to see price move up to the moving averages. But these are things to keep an eye out for. If you're waiting to get back into the market, then I think we're pretty close to a good entry here. I think if it were to break that resistance level there, and some of these or most of these indicators have turned up, then I'll be getting back into the market. This is the opportunity that I've been waiting for some time, since the February low. So that's it, guys. Excuse me. So if you guys just make a comment, and I'll just keep you guys posted next week on whether or not this breaks out. And so this is no trading advice. It's just how I see things. So, all right, guys. Thanks. I'll talk to you next week.